Industries made a strong debut on the exchanges today, listing with gains of over 75%. In our special segment Inside Edge, Mangalam will of course tell us more about the stock. It's been, I think, one of the strongest listings that we've had this year.
One of the strongest listings that we've had here to one of the strongest demands that we've had for an IPO this year as well. Subscription of over 97 times. But importantly, the overall cumulative subscription over 23,000 odd crore rupees, nearly 24,000 crores, makes it the most subscribed IPO in 2023 so far. We know the numbers. The street has ascribed it big valuations as well. The question is, where do they go from here? And that's where the management insight came in. We spoke to the management today, and they said that they're confident of this 35% revenue growth continuing going forward. Last year, remember, the revenues grew around 35% as well. The question on margins, with the revenue growth, are margins going to expand? Well, last year they did 20%. This year they could do 22 to 23%. But structurally, they believe margins have a room of improvement by about 300 to 400 basis points. They did around 260 crores in terms of revenues last year. They have 11 million meters of capacity, adding around 13.5 million as well. So what does that mean in terms of their peak capacity revenue generation? It could be all the way up to 1,000 odd crores over the next few years. The only concern is their working capital, which was over 100 days. They believe that structurally they're working towards bringing that down to 75 to 80 days as well. So those are a couple of insights that we got from the management in our interview with them. And talking about Inside Edge, let's hear out what they had to say to us.
As per the last year numbers, about 30% of our revenue comes from the components business, and over the next 3 to 4 years, we plan to increase the share of that and actually reverse it. So in the next 3 to 4 years, we hope that more than 70% of our revenue will come from the components business, because the components business has they have better margins, and that will help us to increase our profitability as well. The moment we increase our capacities, also with regards to our increase in the revenue mix from the component business, I think that will lead to almost a 3 to 4 fold jump in our in our top line. And if you see the growth that we have had over the past 3-4 years, we expect to continue the same in the near future as well. We have already started working on our cash flows, especially in terms of our inventory. And like I mentioned that earlier we were importing about 70% of our stainless steel coil from China. We have started to reduce that already, so that will have a positive impact on our inventory. Also, we are working to reduce our debtor days in terms of the amount of credit that we provide to our customers. So hopefully in the near future there will be more cash flow from operations, which will help us in building up our capacities. So currently our working capital days is about 100 to 105 right now overall. We expect that to come down in a phased manner, obviously over the next 1 to 2 years, to at least 75-80.
All right, so that's about Aeroflex, a big mover in today's trading session, up around 55 odd %. But Maruti Suzuki